Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Good morning, everyone. Welcome. We're going to get started in just a couple minutes. Big day, guys. Big news today at 8:30. Lots of CPI news. Please trade with proper risk management during that time, okay? Started in just setting up the
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Good morning, everyone. Welcome. Thanks for joining Stocks Number Trading. My name is Ron. My partner is Dave. Welcome, guys. It's 6:53 a.m. Eastern, and it is Tuesday, July 15. So welcome, everybody. Thank you, guys, for joining. Today's a big day in the markets. News-wise, at 8:30 a.m. Eastern, there's going to be lots of red folders, especially in the U.S. regarding CPI. So again, just prior to trading that, please trade with proper risk management, everybody, because we might get some excessive volatility at that time, larger range candles, could be some liquidity sweeps of the highs and the lows, and just be careful trading at that time. Rule of thumb, if you don't feel comfortable trading right at that news release, you can wait after. There's lots of time after news today to be trading. After Wall Street, there's a lot of time, okay? So just trade carefully. I hope you guys are really getting much better at your risk management, which you guys are. And I hope we have a great session today, okay? So the plan for today is we're going to go through the news. Okay, we'll talk about what's going on with all of those red folders today. Earnings, big earnings day as well this morning. A lot of the big U.S. banks are reporting this morning. So we'll briefly go over that as well, because that's as I'm speaking, there's probably some big banks reporting right now. So there's a lot of them today. So just again, with big banks reporting and we've got big red folders at 8:30, it's just we got to use common sense and just use proper risk management when you're trading. If you do take trades, if you do get stopped out, just calculate mathematically how much you're willing to lose on that trade. And it shouldn't be excessive where you're panicking where you're in a trade. You're giving back last week's profits. You're possibly at the brink of blowing up an account if you're using a prop firm and things like that. So again, please practice proper risk management, okay? And Let's get started with just talking about what is going on right now. Okay, so Forex Factory, Tuesday, July 15 right here. We had some European news at 5 a.m. coming out of Europe. We have the ECOFIN meetings all day today. But this is what I'm talking about, 8:30, this North American block right here, which is going to be around 90 minutes from now. You can see that there's quite a few red folders on both nations here. So we got Canada that has the Canadian CPI month over month. Looks like a decrease from the previous 0.6 and they're forecasting 0.1. We have our median CPI year over year. We have our trimmed CPI year over year. Canada has the common CPI year over year. And these are all, if you want to understand what is median, what is the trimmed CPI, what is the common CPI, if you click on the folder, it'll give you as much information as you need here. It's just very brief. It's nothing like detailed explanations, but it just gives you a good summary of what it is. So if you're looking at the Canadian trim CPI year over year, it's a change in price of goods and services purchased by consumers, excluding the most volatile 40% of the items. Okay, so that's why it's trimmed. They've trimmed it down from the most volatile 40% of the items. Okay, and then if you want to get readings of the additional 40% that they trimmed here, then you got to look into another folder. Okay. Then you got your common. So for example, if we're looking at our common CPI, this is a change in price of goods and services purchased by consumers which have similar price variations over time, and tells you what it is, why traders care, and things like that. So we've got Canadian, lots of Canadian CPI coming out, but more importantly, our neighbors over here to the south in USA, you guys have your CPI as well, but the market takes the US a little bit more serious than us Canadians over here. So our American counterparts over here, we have core CPI month over month. It looks like it's an increase from the previous month. Last month was 0.1%. It looks like they're forecasting an increase in the core CPI to 0.3, which is an increase of 0.2%. What is core CPI? Whenever we see the word core, it's got to mean something. So it's a change in price of goods and services purchased by consumers, excluding food and energy. Okay, so when we're looking at core CPI, it shows us everything that consumers are purchasing, excluding some of the most important aspects of what we spend our money on, but it won't include food and energy. Okay, so that gives us a reading of everything excluding food and energy. Then we got the regular right here, CPI month over month. Notice it doesn't say core. So this one will cover everything. This one, you see, change in price of goods and services purchased by consumers. So this one will include food and energy. So it kind of gives you various readings. Maybe some analysts are looking for core. Some analysts are looking for not including core. And then we got our big one. This is the CPI year over year. Okay, so this time last year, CPI was approximately 2.4%. And this time, this year, 1 year, the forecast here is it looks like it's an increase of 0.2%, and they're forecasting 2.6 total. So just looking at that, it looks like inflation is increasing year over year. We will see what the actual number is here. It might be, for example, 2.5. Then what that means is it's lower than the forecast, but it's still more than last year. So, we'll see how the market takes that. This could be, for example, 2.7. Then that means that inflation year over year is going above their forecast, and it's considerably above what it was last year. So again, there'll be some volatility. If you don't feel comfortable trading at that time, at this 8:30 time, again, just stay on the sidelines. Maybe 8:45 might present an opportunity, maybe 9 a.m. Again, then we're moving into Wall Street. Once the dust is all settled, if you don't feel comfortable, again, trading Wall Street, there's 10 a.m., there's 10:30, there's 11 a.m., there's post-New York. You can allow all the news to go through. You can allow all of the big banks to report their earnings and have Wall Street, and then you can trade accordingly after. That's a strategy for most traders. Not everyone trades at this time, okay? So figure out the best time for you, and just get experience while you're trading all of these folders. Okay, over time you'll understand why some traders scale back when there is these big high impact folders. Still trade them, but they lower their risk. Okay. And then we've got our Empire State Manufacturing Index. We've got a few FOMC members speaking throughout the day here. You can notice the time. We've got Bowman speaking at 9:15 a.m. Eastern. And then we move into Wall Street. There's some Australian and New Zealand news today. And then mid-afternoon, if you're trading into the close of the market, you do have some FOMC speakers today, Barkin, Collins. And then at the close of the market in the UK, we have Bank of England Governor Bailey speaking. Okay, so that's the news today. Big news over here on CPI. The market is waiting for this. So we'll see what happens. Okay, and this directly affects the US dollar. So if you are trading anything correlated with the US dollar, it will be impacted by this. Okay. And then earnings, like I said, today's the big day of big banks, right here at 6:55. So if I just update this here, JP Morgan Chase is reporting right now as I'm speaking, 6:55. It's 7 right now. So I can see right now that they've already reported they beat their earnings per share from $4.51 estimate to almost $5 per share, $4.96. We'll see their revenue coming in very shortly. They're projected for 43.18 billion is their estimate. We'll see the number here. Okay, so you got the big names here. These are your big household names. JP Morgan, Citibank, BlackRock is a big corporation here. Wells Fargo and Company, State Street, Bank of New York Mellon Corporation. So there's quite a few big banks today. And notice the time, they're sporadic. 6:55 is JP Morgan, 8 a.m. is Citibank, 6 a.m. is BlackRock, which already reported earlier today. We're just waiting upon revenue to come in. But they did beat their earnings per share. Then we have Wells Fargo right now, 7 a.m., State Street, 7:40, Bank of New York Mellon over here, 6:35. So you can see that they're sporadic throughout there, but big banks will be reporting. Which index are these going to affect? NASDAQ is more tech, but still, if the big banks are reporting good results or shitty results, whatever it is, I'm sure NASDAQ will maybe move in a direction accordingly to big banks. I know someone will say, well, they're just tech. Why do they care about big banks? Because big banks are big money, right? It's Wall Street. So tech will move with the money, right? But specifically speaking, it does affect US 30. US 30 has a financial sector in its index, and it's comprised of some of these big names, okay? So, and then S&P 500 is consists of these big banks as well, okay? You can trade these individually. You can buy shares of these companies. You can buy shares of these big banks. Most of these banks pay a dividend, but you can trade them through just buying straight shares of the company, or you can trade them in an option chain. Okay, so that's the big report today. After hours, what do we got going on later on in the day today? Again, we got some after hours earnings. We got JB Hunt Transport, Omnicom Group, Hancock Whitney Corporation, Washington Federal, Keystra Medical Technologies, Pinnacle Financial, Fulton Financial. So you can see that there's some smaller regional banks reporting and other corporations as well. Okay, in the news right now, what's going on here? Here in Canada, Ottawa's substantial borrowing not expected to hit nation's AAA credit ratings. If you remember a while back, Moody's downgraded US from a AAA to a AA plus. That was so nations do have credit ratings. AAA is as high as you can get, and sometimes it gets downgraded and things like that. So that's in the news. What else we got? Nearly 2/3 of Canadians want interest rate cuts as financial anxiety grows. Everybody wants interest rate cuts. Doesn't matter where you are around the world, not just Canadians here. Who wants to pay interest, a high interest? What do we got going on here? Oh, if you work at Starbucks, you're mandated now to go back to work. Starbucks to mandate workers return to office 4 days a week. What else we got here? Why the S&P 500 could reach 10,000. Hey, it's out there. You never know. Maybe we'll be talking in a few months, in a few years, and S&P is sitting at 10,000. Who knows? Who knows? I was trading Bitcoin when it was $10, and I saw it hit yesterday 123,000 US dollars, which is mind-boggling. Okay, so you can have a dream and it can come true. What else we got going on here? Tesla debuts in India, but its cars likely cost too much for most Indians. NASDAQ S&P 500 futures gain ground with earnings, inflation in spotlight. That's in the news today, okay? Right now, in the futures, right now, pre-market, we got S&P Mini up 0.4%. Mini Dow is just sitting flat right now. NASDAQ is the big one right now in the pre-market, up 0.6%. And a reason for that is probably the chip sector. Anyone seeing right now what's going on with AMD, NVIDIA, and Supermicro, SMCI? They're up heavy right now in the pre-market, around 5%, respectively, all of them. So that might carry NASDAQ. That might carry the semiconductor space and continue moving tech in that bullish direction. Okay. Just in Discord over here, guys, few signals that were sent out. This was DAX sell, beautiful sell, 200 pips. And then just some outlooks here. So US 30 is Dow Jones. I'm just going to read it real quickly here. The Dow is consolidating. This is just an outlook. The Dow is consolidating just below the 45,000 resistance level after strong recent rally. A bullish case scenario is a clean break above 45,000 could open the door for 45,500, especially if upcoming earnings and macro data remain supportive. A bearish case scenario is failure to break the higher may lead to a pullback toward 44,000 or even 43,200 if broader market sentiment weakens. NASDAQ NAS100. NASDAQ remains in a strong uptrend, hovering near all-time highs around 23,000. Bullish case scenario is continued strength in tech and AI sectors could drive price toward 23,400 to 23,800. And that's leading the way with NVIDIA, AMD, SMCI. Bearish case. A rejection at current levels may trigger a short-term pullback to 22,400, especially if yields rise or risk sentiment fades. And then at DAX, if you're trading DAX German 40, the DAX is currently trading just above the 24,000 level, holding near recent highs after recovering from early summer lows. So a bullish case for DAX is if price holds above 24,000, we could see a push to those psychological levels. 24,500, 25,000 is likely, especially if European data continues to stabilize and risk management remains positive. A bearish case scenario for DAX, a break back below 24,000 could lead to a pullback toward 23,700 or even 23,500, particularly if geopolitical risk or economic weakness resurface. Okay. And also gold over here. We've got gold outlooks. Gold is consolidated around 33.50 following a strong run earlier this year. It's holding above key support and showing signs of strength. Bullish case scenario for gold, a break of 33.75 back to 3,400 could signal continuation to 34.50 and eventually 3,500 all-time high, especially if economic uncertainty or weaker US dollars supports safe haven flows. Bearish case scenario for gold, a break below 3,300 could lead to deeper pullback toward 3,250, 3,200 if we lose those strong supporting levels, particularly if Fed maintains a hawkish tone or yields climb. So we'll be watching those 10-year, 30-year Treasury bonds, and also we'll see those lower interest rates if they're going to, at our next FOMC meeting, if they're going to be lowered, paused, or increased. That could affect the US dollar and specifically gold over here. If you are trading oil, a lot of you guys are trading oil in news, WTI crude. US oil is hovering near $66, $70 a barrel, stuck in a range but trying to recover from recent lows. A bullish case for oil, a sustained move above $70 could lead to a push toward $72.50 to $74, $75, driven by geopolitical risk or supply disruptions. So keep an eye on OPEC, keep an eye on your your inventories and things like that, so we can see directly how supply and demand is affected by everything that's happening around the world with crude oil. Bearish case scenario for oil is a breakdown below $66, opens the door for a slide towards 63 or 60, $61 at psychological level down there, if demand concerns resurface or inventories rise unexpectedly. There was a long setup yesterday for gold, which hit 100 pips, but then eventually came back to break even. So there is rules, guys, when you are trading, regarding when you are in profit, how to manage everything. Okay, so we'll keep an eye on our signals today, and over here in Telegram, for everybody, we do have a free Telegram channel on pinned at the top of YouTube for you guys. This is our YouTube live sessions. Some trade ideas get sent out to you guys. We appreciate the feedback from all of the snipers in YouTube and Zoom. Thank you guys very much. This is a trade taken on MicroStrategy, and what else we got going on here? Deals, guys, if you guys want promos, there's limited time deals on 1 year and SST ideas, 50% off. If you'd like to sign up, just visit the website, okay? And join this free Telegram group so you can stay in touch with everything we're doing at SST. And here's our live trading schedule throughout the week. And our free blog also. There's a free blog available to everybody. There is some that are the outlooks for members only, but then you got blogs available for everybody else. Last week was fair value gaps, trading in the golden zone. There's all kinds, trend following, how do Austrian economics play in today's markets, using your Fibonacci, trade like a robot, lots of outlooks, trade recaps, and everything we do here. Okay, so let's get into the charts now. Welcome, guys. So first thing is we're going to look at gold, do a top-down analysis, then we'll move into NASDAQ and US 30. I just have to warn everybody, at 9 a.m. Eastern, I have a buddy that's coming over, and it's the only time he can come, and he's got this machine that he's going to be sanding my hardwood floors upstairs because we're changing the color. I'm going to stain them a different color, so it might get loud because this machine is loud. So we'll see how it is at 9:30. If it gets really loud and it gets really annoying, we might have to call the session, but hopefully maybe it doesn't disrupt. There will be some noise in the background, but maybe we can still navigate up until 10 a.m. Okay, so I'll try my best. That's at 9, but if it gets loud, I apologize. Okay. Okay, so let's just see what's going on here. Welcome everyone on Zoom. Good morning to everybody. Dale, good morning. Nigel, welcome. Samuel, thank you for joining. Mike, Tiganis, Conrad, welcome. Husky, Amrit, thank you for joining. Finally back trading after a whole month away. Good. It's nice to clear the head and get away and come back. So welcome. And everyone on YouTube, thank you guys for joining as well. We appreciate you guys. Matt, vamos, welcome, brother. Tony Gold, thank you for joining. Habibi, welcome. Dion, welcome, sir. And Miko, welcome. I hope you're doing great. And so let's get into it, guys. We're going to start with a little bit of gold. We do have news over here to the left from Financial Juice. So there's a lot going in here. And also, guys, on Telegram, there's going to be a giveaway. Also, we're going to giveaway for everyone, including a free 3-month membership at SST and a $10,000 prop firm account. So there's going to be a giveaway. Stay tuned on Telegram. So that's why I recommend that you add that free Telegram, because you might be one of the lucky winners that gets a 3-month membership at SST with a 10K prop firm account. So I'll remind you guys during the call, but that's why I said over on our Telegram, and that's pinned at the top of the YouTube channel, to possibly join it, because you might be a lucky winner there. And getting free stuff doesn't hurt. I love free stuff. Okay, so let's start off with the daily on gold. Okay, and remember, as I'm doing this, there's a lot of earnings reports. Big banks are reporting. So what we got to do is we got to look at the volume. what's going to happen on gold, Saturday? We're going to look right now. It's you tell me. You educate me what's happening on gold right now. I can just see these 3 days right now. Starting on Friday, you got that big bullish candle. Monday, we opened, gold made a move to the upside, but then got rejected, came back. Look at where it closed, just above 50%. And we got a 3-bar play on a daily. If this was a 5-minute setup, you got your bullish candle opening. It's already engulfed yesterday's volume. So all it has to do now is just backfill the prior wicks, and we could be driving back up to 3,400. Okay, so you can see right now it's in a bullish flag pattern on a 3-day uptrend and could be continuing to move to the upside unless we have news today, which we have. We got CPI could affect this. That could directly reject this move on gold and push it back down. However, if CPI data it kind of correlates with gold moving to the upwards, we could continue to drive through here if it's bearish on the US dollar. Okay, so let's just talk about what's going on in the overall daily. So you can see there was this nice big uptrend that closed above, and this was early April, and you can see how the volume has been moving up until now. Okay, and now we're getting in the heart of the summer months of trading. July and August are traditionally tough months to trade. These 2 months, July and August. Why? Because a lot of institutions are not trading during summer months. There's lower volume in the markets, lower liquidity. A lot of institutions are on breaks. Retail traders take summer months off as well. So there's just lack of volume. But surprisingly, this year, with everything going on around the world, this has been pretty good summer months for July and August for movements in the market. So no complaints by me here. Normally I'm complaining about the summer months, how it's just like watching paint dry. But this year, these summer months have been unbelievable. We've broken all-time highs on various indices and securities here. But regardless, this was our all-time high, 3,500 on gold. When did it hit? April 22. And since then, you start to see the bearish move coming down. And there was a pullback where it came right back up. So let's just identify, this area, this body right here, these two bodies. That's what caused that bearish momentum. So you see how the volume closed inside above 50%, kind of box in that volume, and just get in the habit of stretching into the future. Then when the volume comes up there, maybe you'll get alerted and then you trade accordingly. It came right back up there, and then look, it's a double top, and they pushed it right back down. So if you stretch that zone into the future, there was the triple top that closed above. But notice the day, it closed on a Friday. Then over the weekend, there was some news, and then it opened up Monday and came back down and engulfed it bearish, and then we continue with that leg down. So if I'm continuing with this red zone into the future, you can see we almost came into it yesterday, and we might be coming back into it today, okay? But it is a red zone. So when we're trading through there, you have to understand it's a red zone unless the buyers can cut through there and physically close it above like they did on this day, on Friday, June 13. But when it comes back to retest in here, we got to see the depth of market and buyers be there to support the move. Here, when it was coming back in, I don't see any buyers supporting it or pushing it back up with a higher low. They got engulfed and then it pushed back down. So we could be coming back up there. When we do find a supply area or a red box or where the sellers are, we got to kind of locate the opposite where the buyers. When we had this bullish flag pattern right over here, that was where we started our supporting zone right there. It was this big 3-day uptrend. You can see the second bar in between here at April 10 was the one that physically closed above all of this structure. Then you had, again, a continuation to the upside. Then we finally cooled off. And then right where it cooled off, right there, if you trap that volume on that cool off, on that bullish flag, and then you get in the habit of stretching into the future, then you'll get confirmation to see how accurate your analysis was. When it came right back in that zone, what happened? What were the results? It came in there, got pushed back up, closed above the zone. It came in there one more time, higher low, and closed again, right above the zone. Then the third day, you got a huge Monday, big bullish candle starting the new week right into that double top, and that's what pushed back down. And then right over here, you do get a closure below there. And then we did open bearish ignited and push down. So that's our most recent low from the all-time high is right here, 3,120. And you see it was, look guys, see where the low is, the wick? it represents 50% of this second day bullish candle, the one that closed above the structure. So that's why this candle is so important. Not only on this day, not only on April 10, it's showing us that it did close above all the structure, but look at how much time after when it came to retest in that zone right there. And then there's the respect. And there's where the buyers were there to push it right back up. And then we kind of barcoded near this green zone. Bearish, bullish, bearish, bullish. But then again, we continue to make higher low. Bullish ignited bottom. Higher low, higher low. So it's still ascending. It's still the depth of market is getting stronger. And then we did push up. Look at where it came back into. Red zone. And then it pushed back down. Higher low. Then it went higher into there. And actually closed above. That's when naturally we should have saw gold right here. June 13, mid-June starting, and then maybe coming back up to that all-time high and making a new all-time high. However, the sellers were there the following week and they said, nope, not this time. And then they pushed it right back down. So if you stretch that zone, that green box into the future, you can see how many times we almost came into it right there, May 29. It got pushed back up. We came back in here just recently, end of June, early July, and it pushed right back up. We're coming back up with higher lows. And now we're going to maybe attempt today, tomorrow, maybe this week, maybe to trade back in that red zone. Who knows? Maybe this week we're closing above here. And this will be a green zone for us next week. And we're flirting with that all-time high and maybe even more up here. But it could also get rejected and we're coming back down. Okay, so we'll let that volume move and we trade accordingly. Now, points of interest. Okay, there's multiple points of interest you can look at. One that we've been observing every single day is this one here at 32.85. So I place a yellow line there, and you notice how it's every day. I always place the line there. Why? Because it shows how it was that big body candle, 50% that closed above, there was the retest. Notice how a candle breaks the wick, but look at where it closes right there. That's a clue. Look at the next day how it opens there. So I'm not going to go through all of this, but because I talk about it every single day, but you can see how this 32.85 is holding strong. Look at just recently, July 8, it came down there and back up. Last week, Wednesday, we came down there. What were the lows? Where were they respected? Right there, 32.85. Is it still above like 50% or that zone of this candle on June 30? Yes, it still is. Is it a higher low, a higher low, a higher low? Yes, it is. So we are technically still ascending above here. Now, is there another point of interest? Notice how we found the support and we find the opposite. So that's what trading is. When you figure something out, you just look for the opposite, so that because then they complement each other. Here where I found the all-time high, orange line, I found the most recent low off of the all-time high. So you see how I have two orange lines, and then I have this big red box, and then I complemented it with a big green box. I put this white line, yellow line as a support line on the daily point of interest. So now let's find a yellow line of resistance. That's a point of interest on the daily. So right here, just look at it, guys. Okay, you can see, okay, just not even looking at the number, it's 3357. Normally I look for psychological numbers like 3355, 3360, but sometimes you just got to look at the bodies, okay? So like right here, just looking at this structure. When this candle July 1st came up, it came right there and rejected. Next day, look at where it closed, right at that yellow line. Next day, look at where it opened, right at the yellow line. Then it pushed down. Again, we're looking just recently. Last Friday, it broke above there. Look at where it closed, right at that yellow line. We opened this week, Monday, came up bullish, made a new high. Okay, remember, it's important to make new highs if you want to continue to trend up. But when we made that new high, there were sellers up there and they pushed it right back down, and look where it closed right there. Look at now today, how we're trading, where we opened and we're trading again, right at this yellow line. It pushed up but didn't make a new high, and we're trading right at it. I can go back and look in the past. Right there, a body candle hit it, open. Look at here, when you got this big bullish candle coming right up, look at it again, where it closed, look at where the next day opened and pushed down, okay? So that is a point of interest. I can continue to look for more points of interest as much as we want, right? Another good point of interest will be if we continue to move up bullish and fill our wicks, we're trading in this red zone, maybe we fill that wick, maybe we fill this wick and this wick, but right here, I would be concentrating on this big bearish candle because that was a big movement to the downside when we closed strong. So I would definitely locate 50% of that candle right now. Like from where it opened, that black candle, and where it closed. There's 0.5 of it right there, 3,410, I would say, right there. So that would be another daily point of interest for me. I would be locating that right now because, we could be trading in there this week, and then maybe we find some resistance right there, and then it gets pushed back down. Okay. And then now what I look at is like just some structure. So last Friday, it was a very nice bullish candle coming up, pushed and closed right there. So if I'm locating now 50% of Friday's volume, okay, but you can see how the most recent pullback is right in there. But let's just do it, get in the habit of using the Fibonacci tool. It's also known as the Rananachi tool for most of you guys. So it's right there. There, you see, guys, 0.5 of Friday's volume from the opening price to the closing price is right there. And it's kind of representing both our lows from yesterday and today. And look at the number. It's a nice psychological number, 3,340. But don't just stop there. When you find the 0.5, that's being very, very, very specific and very technical. What you can do is you can give yourself a little buffer, a little zone, okay? So just go one standard deviation or one Fibonacci ratio above. In this situation, it's the 618, the way how I plotted it. It could also be the 382, depending how you plot it, or if you have them in reverse. Regardless, just one line above, one line below. So I'm using the Fibonacci, the 382, the 0.5, the 618, that zone right there. And I stretch it into the future. So if we continue to trade back in here, like if we get pushed down or tomorrow it's bearish and we're barcoding bullish, bearish, bullish, bearish, this is a good supporting area. You can see it's still holding. It's holding above 50% of this big bullish volume candle that closed on Friday. So it could still build. We're in a flag and we could have a high probability of continuing to break to the upside. But we have big news today, which could come in and say, nope, not today, and push it right back down regarding the CPI news. And then when I look at the overall pattern, what's going on daily, it came down right there, kind of bottomed out. There's the volume where it stopped the bodies, okay? And then it came right back up. There's our neckline. And then when we came back down, did it come back down to the bodies where it's kind of a traditional double bottom right there? No, it didn't. It came right up here, okay? So, oh shit, sorry. Let me just grab another one of these arrow tools. It made a higher low, okay? So when it came down right there, stopped. There's our big neckline. That's our resistance. It came back down. There would have been a nice natural double bottom, but look at what it did. It made a higher low, okay, right there. So it's pushing up. They're respecting this depth of market, but again, we're not closing above. So if this was like a 5-minute pattern, I would be saying, guys, let's wait for a bullish body to maybe close above here. So we would look for a closure, confirmation above this point of interest. Then maybe if we come back to retest this point of interest, the yellow line could be support. Maybe we retest this zone, but regardless, maybe if it comes in here, that could give us that momentum to backfill these wicks and drive into that supply zone. So it looks like it's a W pattern on a daily with a higher low. That's the clue that it wants to push and continue to break out of here. So that's our daily analysis, weekly and monthly analysis on gold. Like if you want to draw a trend line coming from here to there, you can still connect the dots and you can see that we are trending up. And we could definitely break through this week or next week regarding all the news that we have. Okay, so what I do now on this daily candle is I start to break it down. You can go down to the 4-hour. This is where I'm a surgeon and I start dissecting it. So I like to dissect on the hourly, then go down to the 5-minute bars. So if I'm looking and I'm an hourly trader, to me, I see what I see. It came up there, one top, back down, neckline, came back up, kind of broke a little bit, second top, and then they closed it below. There was the body that closed below the structure. And then look at now how you use that hourly candle, 50% right there, or that zone. Look at that bear zone when it came right in there. Look at it, they pushed it down and continue to come down. Now we come into that bigger daily green zone. Remember that big bullish flag pattern that we figured out on daily? Now you see how the hourly volume comes in there, goes back up, doesn't break, and then it's coming up, close. Look at the big ignited break impulse. And then now look at the hourly candles, how we're trading. It came up, back down, came up, back down, came up, and now we're moving back down. So is there an hourly structure that you guys can see? I can see hourly structure. Just looking at all of the wicks right now, like starting right here, all up to there you can go to the bodies. Is that a green zone? No, we don't have volume above, so it's got to be a red zone. So I can still see that the sellers from right here when they pushed it down, but we came into that big demand zone. The hourly buyers were there as they came right back up. They transacted in here. What happened? What were the results? Look, it came in there. They pushed it back down. It opened. It came in there. They pushed it back down. Came in really strong in there on that hour. And then what was the results? That was 3 a.m. That was London. 4 a.m. They pushed it right back down. It came up again. 5 a.m., 6 a.m., we came in here again, and what were the results? They closed it back down, and now they're pushing down. So now the bears are right now. They're trading right now at that daily point of interest yellow line. What happens if they close it below here? This yellow line will start to act as hourly resistance, and maybe it might come up and retest this and get rejected, and then gold is starting to trade down in here. So one thing is, if we do break, where could we go down? Are we going to go all the way down to this green box? Possibly it could, but there's levels to get down there. You got to go through some volume over here. So first thing I look at is this big bullish candle at 11 p.m. last night. It opened, ignited, it filled the wick, and it kind of closed right near the high. Can we figure out where 50% of this candle is? Definitely. We could just, again, opening price, closing price of that hourly candle. There's my white line. There's the 0.5. So for hourly, I use white lines to distinguish the difference between is it an hourly, is it a daily, is it a 5 minute? So right there, I placed it right at the 0.5, 3,354.55. Can I find a bullish zone on that hourly candle? Yes, I can. So again, just one standard deviation, the line above, one line below. There's now my bullish kind of zone on that hourly, and I stretch it into the future. Okay, so now if we trade into here, if it's bearish, we got to come in here first. What happens when we come in there? There might be buyers that bring it right back up. Okay, if it closes below there, I'm not changing the zone. I'm going to change the color of it. I'm just going to invert it red. And then maybe the buyers are now buying into where there's now supply now. It's inverted now. And then it might kind of, get rejected and consolidate bear flag. And then we're pushing down to the bigger green zone. But then when it gets down here, the hourly buyers are showing me they're here, they're here, they're here, they're here. Okay. There was those push downs. But if I place like a point of interest on the hourly, there's the body, retest, body, 3,342.99. Okay, it's like a Walmart price. So that could be in there where it comes in, and who knows? That's where you could get a beautiful buy out of there and continue to come right back up. Okay, so that's what I see on the hourly. On the daily so far, what do we got going on? Just the last few. Recent look, I do see it did make a higher high above these wicks. Okay, so that's strong. Man, we need kind of higher highs to continue to move up. But when it came up there, it got rejected. It closed as a shooting star candle right at the lowest point. And then next hour when we started the call, 7 a.m., we opened. Did it come into 50% or below the volume? Yes, it below there. It did. It got rejected. Again, there's no wick on the candle, so when it broke, it kind of popped firecracker style. And now we're feeling this wick. We didn't completely fill that wick. We're getting to this yellow line. This hourly candle is going to close in 25 minutes, so lots of time till 8 a.m. And we'll see, will it come back up? That's why I stretch this red zone into the future, okay? And then we'll see if we continue with this bearish momentum, pushing down. Again, we got CPI news coming up in an hour, okay? So that's what's going on the hourly, okay? Now let's go into the 5 minutes. And this is how the 5 minute bodies are trading in between everything. So you see kind of just a bullish flag on the 5 minutes. And again, guys, okay, same shit. What I did on the daily, I did the same on the hourly. I'll do the same exact on the 5 minutes, okay? Was this a big bullish 5 minute candle? Yes, it's not a trick question. Can you identify exactly what we were doing on every candle. That was that locate the opening price of that 5-minute candle, locate the closing price. Can you figure out where 0.5 is? Yes, it's right there. I'm going to place this red line, and then you see how it acted as support, 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 and continue to move up. And then if you want a zone now on that 5-minute candle, the same thing I did on the daily, it's the same thing I did on the hourly. It's not going to change what I do on the 5 minutes. There's my bullish zone on that 5-minute candle. And you can see now, here's the evidence. When it came in here, what happened? It came in and closed in there. And then it continued to push up, but we got rejection, rejection, rejection. When it came back down, what did it trade into? The green zone. What were the results? It came right back up again, new higher high. They pushed it right back down. Then again, we came again in, traded in here, and then what were the results? The buyers closed it above. I don't see sellers closing below there. I haven't inverted that to a red. It's still green. And what were the results? After that accumulation, it continued to drive up. Where? To the bigger red zone. And then what were the results? They pushed it back down. Where? Back down to that red line in the green zone. What were the results? It came back up, pushed again up there, but you still see the lower high, the red zone is still holding. What were the results? They pushed it back down into that zone. This is where it did in fact close below. And then it came back in, got pushed back down. We're barcoding bearish, bullish, bearish. And then again, the big bullish candle closed above, bring it right back down. So you can start to see like how the 5-minute candles, they did break down, but where did they kind of find a bottom? At this daily point of interest, yellow line, they continue to come right back up. There's a bullish hammer closing above. That's a fantastic scalp trade. I love trading these where I see it come down to a daily position, pick up, come back down. This is a clue where it was really, really, really bearish and it came back up and closed right near the high. You could buy that candle, you could buy that candle. And if you did, you grabbed a few pips to the upside. But if you don't do anything in the red box, then the shit comes right back down. You know, this is how the game is. So you gotta understand the time frame that you're trading and be disciplined on that time frame. Okay, look at what I'm doing. All I'm doing is just moving this zone into the future, and then you see when it came back in again, what were the results? Went right back up. Then it starts getting in there, little choppy, but continue to move up. How many times has this red box held up here? So they rejected the buyers there, rejected the buyers there, rejected the buyers there, rejected the buyers there. But they are making these highs. Now, look at this zone. Again, I'm stretching it into the future. Now, we've got bearish volume below the zone. So it cannot be a green zone right now. We got to make this a red zone. So if we're buying now, or if anyone is buying, you're buying now at this could be resistance, short-term resistance. This is still the big resistance up here. In order to maybe take a buy on gold, like at this zone, I'd like to see if the buyers can close it above. So if it closes above, I change it back to green. Maybe we'll come back in there, retest it, and the buyers are there, and then we're moving back up to there, okay? But it could also come up right now into here and get rejected and move back down, okay? So that's what we got to watch for in the next little bit, okay? So I kind of did this gold analysis and walked us right into what is going on right now. And then what are the most recent lows? Like I can see this low of this candle. I can see that low. What I like to do is just, connect the dots. And right now I see that 3356.50, it's equal bottom lows. That wick and that wick are basically equal. Okay, so I can go backwards now to see why are they equal right there. This is, guys, how I learned price action. Nobody taught me this. Nobody. I can confidently say this. Nobody taught me this. I taught myself this. How did I teach myself this? By doing this, by just connecting the dots, putting a line there. Then I would go back and say, holy shit, why is it the same right there? Then I would go all the way back and holy shit, why did it cut through 50% of that big bullish candle? And then it came back and retested it and it's support. So it was support there, support there, support there. So this line ongoing can be support in the future unless the sellers can close it below that. Then when they're coming back up, I used to see it come back up and it get a wick and then it would get rejected. Then I started to teach myself, oh, so support can turn to resistance just if the volume is either above or below. And then I started to say, oh my God, I figured out my secret of trading, and I'm going to become rich. I'm going to become a millionaire now. I'm going to get rich quick. And then I learned about false breakouts, because I thought, oh my God, every time it has to come down here, it's gotta be that static. So if it breaks, it retests, it has to sell. So I would sell. And then what would the market do? It would go down just a little bit and come back up and close above there and do this. And I'm like, oh, that's shit. I thought I was going to get rich quick by doing this. So the market doesn't always respect these. You got to use a little common sense now, I learned. You got to watch for fake outs. There might be multiple confirmations you need. Yes, from time to time, you'll hit it right away on the first retest, but sometimes you got to wait like 15 minutes, 30 minutes, 1 hour, 2 hours, like you got to just feel it out. Okay. But right now, looks like those are equal bottom lows, and now we're pushing back up. So let's see now, will this bullish candle again close above? We've got a daily point of interest, yellow line. Will the volume close above it, below it? Will we use this as support to go back up, or are we just going to continue selling back down? Okay. Does that help, guys? Does that make a little bit of sense? That was a longer duration of top-down analysis. And then we can add some indicators. SST daily bar indicators right here. So this is our whole entire daily bar. It's kind of like a recap. You can keep it on the side here. It's very handy when you're trading. So there was our opening price. There was the lowest point. We came up, highest point, and pushing down. Okay, and then this is how the volume is trading in between all of this right now. Do you guys have any questions about the gold analysis? Okay, we're watching it right now in the 5 minutes. So maybe we are consolidating in between here now. And below that red zone to those equal lows right there. So this might be where we're in a consolidation right now. Like if you go backwards, this is what you can do. Go backwards and see when it broke down in there, what were the results? It went right back up. Okay, look back. When we came in there, it held at the yellow line. We went right back up. Continue going backwards. You can see right there how it built at that yellow line and continued to go back up. Another thing what I do is, okay, this keeps me disciplined, is if I'm looking to maybe take a buy above here, I'm looking for it to come back up to this red zone right here or in it, okay? Because I can see in the past when it came in there, it went right back down. When they came in there, it went right back down. Came in there again, back down. Came in there again, back down. So definitely it could come back, do something like this, close above here and come back in there, and maybe it will go back down, right? So what I do is I like to measure from here to there. It's about 33 pips. If it goes up to there, it could be about 40, 45, okay? So I like to measure the move. Then if I'm in a buy and it's going up there, I'm very disciplined to maybe close out 80% of the profit and maybe just leave 20% running, because there's no guarantee that it's going to just break through there and continue to drive. It might just come right back in there and go right back down, okay? So, I just go with the flow of the volume until it proves me otherwise, okay? If they can close it above there, then that's a different story. We're having a different conversation. But what I see when it's coming in there, the results are it's going back down. It came back in there. The results are it went back down. It came back in there. Results are went back down. Again, it came back in here. Results went back down. Okay. So what happens if it comes in there again? I might be repeating the same thing. Results are it went back down. Okay. Now we're breaking through those lows and we're coming more now into a green zone. Okay. And more at an hourly support. That's why I have a white line there. So 3354, 3355. It's coming down, coming down, coming down. Maybe we might get a good opportunity to buy out of this green box if it comes in there, or sellers might be strong like yesterday. You saw how strong gold was selling yesterday, and it just kept breaking and breaking and breaking. But we'll see when it gets right here. Yeah, Nagraj, if you can open up a Discord ticket, and we'll get to you about that. Yep, it's available for you. Just open up a Discord ticket, and we'll help you out with that. Okay. Okay, so 7:45 right now. There's lots going on in the news. Okay, so just if you're joining us late, just recap. We've got big CPI coming up in 45 minutes. Canadian side and US side, a lot of red folders, high impact. Okay, we got Comex market opening up at 8:20. Earnings. We got a lot of the big banks reporting right now in the pre-market. So JP Morgan already reported. Holy shit! Look at it. They blew out of the park. Okay, their earnings per shares. Look at the revenue. Okay, they were estimated for just under 44 billion. They came 70 billion. Okay, so who's saying big banks are not making money right now? They're making money, hand over fist. Okay, Citigroup reports at 8 a.m. in 15 minutes. BlackRock. Okay, this is a big name you should be familiar with. 6 a.m. they reported from $10.79 EPS to $12, beating that. 5.38 billion. They beat it. 5.42. Growth surprise looks good. Wells Fargo, another big bank, beat earnings, EPS, big revenue beat. Holy shit. Big banks are making big money. State Street, beat. The smaller regional banks, Bank of New York Mellon, beat and a beat. Look at it. From less than 5 billion to 10 billion, 2xing their revenue. That's huge. Anytime I can 2x my bank account, that's big money, guys. Look at the big banks. Okay, so banks are making money. Okay, Wall Street is making money. No question. Okay. Okay, so look at now. The bearish candle has came all the way in there. Look at where it cut a wick right at our 50%, right at our hourly point of interest. Okay, so look at the response. So there is pending orders waiting there, and they just got activated. They just got filled. This bar is going to close in less than 3 minutes. So it found some initial support right here, but where will this volume close? Will the sellers absorb those buyers and bring it right back and close in here? Or are the buyers going to maybe push this bearish volume back up, and maybe we'll start a leg coming back up through here? Okay, so again, we're just going to continue to watch this. And in my prediction for a CPI for gold, okay, let's just put the pieces of the puzzle together. I'm going to ask you guys, for any of our friends that live in America, do you see that the cost of goods are going up when you go shopping? Normally, like your food and energy, okay? If we're talking about core, remember, excludes that. But if you're talking about just common inflation, is your food going up when you go to the grocery store, or is it relatively cheap? Is it, has it gone down? Look at the response by the buyers right in that green zone. So if you are using pending orders, this is where you position your pending orders, in these zones. Do they always work out like this? No, but from time to time, if you do have your zones properly mapped out, you could get filled at the perfect location. And that's what we call a sniper entry. It came right in there, and look, you could have been pending, waiting in there, and you got filled, and you're up 30 pips with a blink of an eye, okay, with zero drawdown, okay? Why? Because the bigger buyers are in an hourly zone. Bigger buyers are not just looking to just buy this candle right here. Those are the scalpers. Bigger plays are in these zones, okay? So this candle is closing in 60 seconds. Look, it might come all the way right back up and close above that daily point of interest and maybe continue its next leg up. It might come back down, but notice the size of the wick. Okay, so you see how it got rejected right there? So let's watch where it will close. If the sellers continue to push it down, they got a long distance to fill that wick and get down there. So buyers might come up again. So it might be rotating, getting ready to rotate back up. But for example, let's say inflation it's going up, right? Month over month, year over year. How will that affect the US dollar? Is that good or bad for the US dollar? I'm not doing trick questions here, just simple. Is if inflation is going up in the United States, month over month, day over day, year over year, is that good for the US dollar? Probably not as good for the US dollar. So then how would that correlate to gold? if we have those results coming out and we have a weak US dollar, then probably would be bullish for gold. Why? Because you'd see a lot of institutions selling US dollar and buying gold, right? So it would increase. It would be a bullish scenario for gold. And then the opposite is true. What if CPI is going down? What if inflation is going down? Then that would be, maybe investors would possibly start to buy more US dollars, and maybe that would cause a sell in gold. They're moving the money away from gold, selling gold, and then they're buying the US dollar. They're buying more of an appreciating currency or an appreciating asset. Okay. Same thing with stock market. Someone says, well, Ron, how will that affect the stock markets? Well, just again, let's go through put the pieces of the puzzle together. If inflation is going up, that's not good for the US dollar. Money is institutions are selling the US dollar. It's weak. How does the stock market work? It works with US dollars, buying shares of companies. So that might cause a sell off in the stock market, might be a bear scenario. Okay, so that's just a rule of thumb. Does it always work out like that? No. I've seen CPI results come out and they've been horrible. Like you would traditionally see US dollar be weakened and go down, and I've seen a bullish scenario for that. So that's why I just take it candle by candle. I take the news in and then I just trade accordingly. Is it always going to be like that? Is it always, if it's a weak dollar, gold goes up? No. I've seen weak dollar and I've seen gold go down. I've seen a strong dollar and gold go up. I've seen strong dollar go up. I've seen gold go up. I've seen NASDAQ, US 30, and S&P all go up. I've seen Bitcoin go up, and crude oil, all of them go up like at the same time, So I'm not a correlational trader. I don't trade just because this is going down, the other thing has to go up. I trade this. I trade volume. I like to know when the news is around so I can use proper risk management. But I wait for volume to maybe close and give me confirmations. Okay, so now we're trading right back. See how it closed? And now it opened ignited, so the sellers are pushing it down. But remember what I said, it's got a big wick to fill. If that selling volume can continue to fill that wick and break for a new low, it's showing a lot of bearish strength still. So that's what I'm looking for, is maybe to build a higher low. To come back up now. It gives this long wick rejection gives the depth of market more time for buyers to start positioning themselves to get in here before it breaks for a new lower low. So again, we're just waiting for it. We're trading in this green zone. We may see a reversal. We may see a break here. We might see some liquidity grab, but we're still trading in this. For everyone on YouTube, like I said, there's join our free Telegram for that big giveaway right over here on our Telegram channel. It's right over here. So here it is, 15,000 FXFI account. That's a giveaway for a prop firm account plus SST 3-month giveaway. So we're giving it away to one lucky trader. And Stocks Never Trading. How to be part of this or to be the winner, follow us on Telegram, then click the link on Instagram, head over to Instagram, find the giveaway post, tag 3 traders in the comments who need to see this, and it's valid until this week, July 18th. All the instructions are there and all of the links. So available for everyone on Telegram. Lucky winner will get a 15K account and a 3-month membership at SST. Okay. Okay, and we're closing in 1 minute. Okay, time and sales is very important in the markets. Okay, it's an auction. So we're approaching in 5 more minutes, 8 a.m. Eastern. Okay, and we've got the price of gold coming all the way down into a demand zone, into hourly point of interest at 8 a.m. Okay, so maybe we may get a reversal at 8 a.m., like a momentum switch. Hourly buyers stepping in the market. It's at an hourly zone. So that would suggest good support area to maybe look for a buy. However, it could continue at 8 a.m. pushing below here and close below there. So what I see right now is I see a higher low wick I see, so it's still holding some support here. We've been trading in this green zone. It's still holding. Okay, see the rejections, but the bearish volume where it closes will dictate the way how it goes. And we have 5 more minutes to go into 8 a.m. So here's the close of this candle. We're still below this red line. This red line, remember what it was? It was that wick and that previous wick that were those tweezer bottom lows. But now we got bearish volume closing below it. So this red line is resistance now. So if it comes back up there, could come back up and it could get pushed right back down. Okay, it could go back up and close above there. Then that red line would be support to take us back up to this daily point of interest, and then maybe ultimately get back up to that red zone. So what I do with these is I just continue stretching things into the future. These will always be static lines on my chart. The yellow, this red line, it just depends on how the volume is trading. The only thing moving is the volume. That's the only thing that's variable in this chart. Everything else is all static. Okay. Oh wow, Tony, nice. You're done for the day. You're not giving any profits back. Amazing. Guys, like I see some of you guys are hitting your daily goals prior to even COMEX opening up, prior to even Wall Street opening up. And that's fantastic that some of you guys can do that. Okay. That is great. Anytime you can hit your daily goal, get out of the markets. Yeah, that's why I have some hobbies. The greatest thing in the world is hitting your daily goal and getting out of here so you don't have to stare at these charts and hurt your eyes all day. Okay, and I'm just looking at the pre-market right now. Alibaba is up almost 6% right now, so just showing how Chinese securities could be moving right now. AMD is up almost 5%. Okay, I was talking about that earlier with the chips. NVIDIA is up almost 5%, new all-time high, trading at $171 right now. Holy shit, NVIDIA. Also, to stay with the chips, what else we got going up here? SMCI is up almost 4%. It's trading at $51 a share right now. Do you guys remember the big dip on SMCI where it was trading at almost $100 a share and it dropped down to $18 and people were panicking, and I was backing up the truck to load up on it. I was telling everyone that could be an opportunity of a lifetime. They had some accounting errors and things like that, but it's still a sound company. And, if you're waiting patiently, that was a great opportunity. Man, when it hit $20. Same with like NVIDIA. When it broke, I remember I was in Europe, August last year. It was trading below 100. It came down to $84, 85. I tried to get filled in there. I got filled at 92. But looking at it now, if you filled in there, sub $190, it's trading at 170 right now. Like you could almost 2x your investment. Like how banks are 2xing their money. You can do that too. A lot of opportunities, not just with semiconductors, not with just tech and chips. There's all kinds of securities out there that are great securities. They do go on discount from time to time. The markets do go bearish, but I look at those as opportunities. Okay, some traders and investors get scared. They get scared when they see red in the markets. I don't know. When I see red, my eyes turn green. It's just I change my eye color. Just like I change these zones, I change my eye color. When I see red in the markets, I see an opportunity to maybe make some money by buying. But you got to buy you got to buy smart. You can't just go all in, because what happens if it continues to push down? There is those situations. That's why you move in slowly. You position yourself slowly, if it goes down a little further, you can add a little bit more. You're increasing your shares of the company while dollar cost averaging down. Then someone will say to me, well, Ron, what if it never comes up and it keeps going down? Okay, then the way how I debate that, or if I Do you think NVIDIA is going to go bankrupt anytime soon? Okay. Do you think like these kind of, like Tesla? Tesla is a good example. Everyone's scared to buy Tesla right now, saying it's I don't want to buy it right now. I don't care about the discount. Do you think Tesla is going to go bankrupt? If you actually do think Tesla is going to go bankrupt, then stay away from it. Then don't buy it. But I don't think there's a lot of people that think Tesla is going to go bankrupt. Elon Musk just signed a deal with the U.S. government just the other day. I was reading $200 billion deal. Did you guys see that? So I guess him and Trump are, back together. But he's getting government contracts, $200 billion. So that's fantastic. That's good for the company, good for the shareholders, good for. Okay, so we're at 8 a.m. now. Okay, so do we have any bullish volume closing above here? Not yet still. So we can still see sellers are still pushing down in here. Look, it's making lower lows, so it's still pushing down. There's still bearish volume coming down in here. So now we're transacting in this zone of support, zone of demand, okay? Now we're getting the transactions. Right now, if I'm looking at who is the aggressor, the seller is still very aggressive coming through here. So it could definitely break through here, okay? So I'm not in a sell, I'm not in a buy. I just don't feel comfortable selling the lowest point in a demand area. It just goes against my rules. Unless a bear candle can possibly close below here, and then I can change the green zone to red. That might be a different opportunity. But just to sell right here, not my cup of tea. I'm waiting to see what will happen here. And just a heads up out there, at 9 a.m., my buddy is coming. I got engineered hardwood floor, dark color upstairs. The wife doesn't like it anymore, so I don't like it either. We're vacuuming it 2 times a day, mopping it, and there's kids' footprints everywhere, and it shows dust and hair and dirt and all kinds of stuff. So it's going to be sanded and stained a nice natural oak color. So you might hear that machine. It is loud, that machine. So I'm going to try to the best of my ability to continue to stream after 9 a.m. while that's going on. If you guys tell me it's too loud, then we'll call it a session. But if you guys are okay with it, we're going to continue right till 10 a.m. Okay. But I do apologize for that. But he can only come from 9 to 11 today because he's got other things he's doing. You're on the journey of trading with SST. You see, we're doing home renovations, completely gutting the entire main floor. The kitchen is going, all the quartz countertops, new colors, the hardwood color is going to be changed, doing all the tiles, all the everything, guys. It's going to be a disaster up there. Okay, so again, I ask you guys, is anyone in a buy or a sell currently in gold? Okay, we're getting to an hourly point here, hourly supporting area. If we do break, what was the most recent low break? Look at that wick right there. This was at 11:15 Monday. Broke right there and held support at 3,352 right there. Will we come back down into this area? Remember, below this green zone, there is liquidity down here. So is the market coming down to take some liquidity prior to COMEX and prior to CPI? So that's what I'm watching right here. Sangar, are you buying now? Yeah, if you buy now, you're buying in an area of demand, but I'm kind of waiting for maybe a bullish candle to print to show me a little bit of strength because I still see lower lows, lower highs, and bearish volume. So got to let it play out in here. That was good push on that wick. Kind of closed near this hourly area. Maybe could entertain a buy there. Where's Dave? Dave is trading with the snipers on Zoom. He's doing post New York right after me today and tomorrow and Thursday, 10:30 to, I believe, noon. Okay, so again, how did it close? Where did it close? It closed with bearish volume below that hourly white line. So again, the buyers could not even close above that hourly position. So it's still bearish, okay? Longer wick down there. So will the sellers be able to continue to push it down that wick and create a new low and maybe come after this liquidity right down here? Or are the buyers going to come up with a higher low and push this thing back up, okay? Oh, sorry, I don't have the EMAs. 9 EMA, you can see the 9 EMA is acting like a trend line where we are below it, okay? And the 200 EMA, we just had a bearish crossover. The 200 EMA is right there. So we have a bearish crossover where the 9 EMA just crossed below the 200. So look at how it's really just selling down. That candle, look, it's filling and might create a new low. So we do have liquidity down here, okay? And then that red line is right at that last low wick right there. That kind of broke and that's what started this big leg going right back up. So are we going to revisit this? Is it going to break for a new lower low, or is it going to be a higher low or an equal bottom low here? So that's what we're watching right now. And it is 8:06 right now. Okay, so we're getting very, very close, about less than 15 minutes away from COMEX market open, and then the big news CPI data, okay? Thank you guys, over 200 viewers on YouTube. If you guys can kindly leave us a like, subscribe to the channel. Make sure you add that free Telegram channel that's pinned at the top of the channel, because we're giving away, the instructions are there for a $15,000 prop firm account and a 3-month membership here at SST. So we hope you guys do enjoy that giveaway, and we'll announce who the lucky winner is, but you got to follow the instructions. It's all detailed for you guys on the Telegram. And guys, just to, heads up, I don't know if anyone is in a sell and moving down with this, just, don't get greedy. That's all I've learned in the markets, is just don't get greedy. Sometimes when you get greedy in the market will punish you. If you're in a sell, who knows where you sold from? If you're in good profit, have a trailing stop loss, secure some money in case this thing reverses back up. You secure some money. You can take partials out of the market, like a certain percentage. That's what trading is. It's to compound your account. So when you get in a fantastic trade, if you sold, anywhere up here and you're in this and it's moving 100 pips, do something. Don't be scared to take some money out. Yes, it could continue to go down, but if you just have that mentality, you're going to miss out on a lot of gains, on a lot of profits, okay? I had that mentality when I first started trading, and I just lost years and years of trading. Why? Because I was looking for bigger and bigger and bigger moves. When I would go up 100, 200 pips, I wanted 300, 400, 500 pips. And I would just hold it and just hope and pray that it would continue to go down. And then all of a sudden it would come right back up, retrace, and then I would be left with nothing. Just staring at my account, wondering what the hell did I just do? So I've made it a habit that I secure money, all time frames, whether I'm scalping, swing trading, investing. It's good to take money out of the market. That's why we do this. We don't just do this to just stare at charts all day and hope for the best. A lot of you guys do this as a supplemental income for your family. Some of you guys do this as a sole income. Some of you guys just do this on the side and do other things. Regardless, we do this to make money. Okay, so we're continuing to push down. I haven't even looked at the RSI indicator because I sometimes I don't like looking at this thing. I can tell it's oversold by looking at how deep these 5-minute candles and this trend coming down. Yes, now I look at RSI, it's telling me we're at 20 on RSI. That is oversold. That is a condition to tell you to buy. But if you bought anywhere here, here, or here, you're in drawdown. Okay. So I'm waiting to see a bullish candle come back up. I'm waiting for something. This could close below here, and in this green zone right there, see how it closed below? Now what I'm doing is I'm flipping the green zone red. We lost that entire green zone right now. So that white line now is no longer support. That hourly white line is now resistance. Now the buyers might come in right here because there's some liquidity. They could come back in and it could get right there at that hourly and then rejected back down, right? Maybe we got to start to see, is there going to be like a double bottom forming and then we get something like this, okay, to the upside? Or we could just continue selling off. It could come right in this red zone, get rejected, and we're continuing to push right back down, okay? So this is what I'm watching. And all of this was a big daily bullish candle coming all the way right up here to 3,366 and a quarter, right there at 620. And this exhaustion wick on the daily is all of this 5-minute volume pushing it down, okay? And we are about eight minutes away from COMEX, okay? But, remember, 8:30, 20 more minutes, we have the big CPI. So we'll see what happens, okay? But just keep in mind that gold has been selling off dramatically, leading into maybe COMEX and news. Okay, so just let's put the pieces of the puzzle together again. What we were talking about CPI. Some of you guys said, Ron, how could CPI affect this? So remember what we were saying. Let's say CPI is bad. Okay, let's say it's increasing month over month and it's increasing year over year, right? So that's not good for the US dollar. We'll see a weakened US dollar. Right now we see a strong US dollar that's causing this gold to drop right now. So what happens if we have that scenario where we see CPI increasing month over month, year over year? That could be, again, a weak US dollar. That could cause gold to go up. And now gold has been selling off. Maybe we just got to wait for it to come down to a certain key location, and it might be a great buying opportunity. And with the CPI news, with that scenario one, then that could cause a nice bullish move back up for gold to continue to retrace back up. Okay. So look at naturally how it's pushing down prior to COMEX and prior to that news. Okay. So that's one scenario. Okay. I could be completely wrong with that scenario. What if it's the opposite? What if the CPI data is like it's good, it's decreasing month over month, decreasing year over year. So it throws all those estimates off. That could be, again, very strong US dollar, and then we could see further selling of gold. So maybe you kind of see it bounce a little bit, and then it continues just to push back down, okay? So that's what we're watching here, okay? Okay, so you see that bullish candle, how kind of we got those, okay, so where I placed that wick, and then we got those two wicks, those are equal bottom lows right now. So when we're looking for clues, that's a clue right there, equal bottom lows, coming right back up to the red zone. 50% of that bearish candle, it just got rejected, but when it's coming down, it's going back up. Have we found maybe a support area now? Okay, we got tweezer bottom lows and we got body to body right there. So what I do is I just start with my green zone and see how long it will hold up without breaking. This might be a supporting area that is being formed right now in the market as I'm speaking. Okay, so again, what I do is I just identify and I stretch it into the future. And I see if it can continue to hold, right? And this could just be one move. Like, look at this long leg down, and it could just be one move that comes up. What we got to look for is kind of like two moves or double bottoms, okay? But regardless, it came up very, very bullish right up to there, to about 50% of that bearish candle, okay? Open, close, half of it is right there. And what were the results? It got rejected and closed right as a bearish pin bar. Now we opened ignited bearish. So it could just attempt and break and continue to drop, okay? If it does, where could we go down? Then we're trading down into here. But right now, let's see if it holds. So it held kind of like triple bottoms right there. Those wicks, that wick, that wick, that wick, still holding. Now it came back down one more time. So you can still see, is this area acting as support or is it going to break? So we got 3 wicks in there. Okay, lots of selling pressure still in there. As it comes back up, they're pushing it right back down. Okay, and we're about 4 minutes away from COMEX market open, okay? Andrew, what time does COMEX close? 1:30 p.m. Eastern. Opens at 8:20 a.m. Eastern right now in 4 minutes, and it closes at 1:30 p.m. Eastern, Monday to Friday, okay? Okay, so you see that didn't hold. Those wicks, it came back up, lower high, and they're pushing it right back down, okay? So they're really, really, really bleeding it out. What was that? Bradley, the NASDAQ spike, do you know why? Last night during the futures market, is that what you're talking about? It was about, it was about the chips. Yeah, you got it right there. NVIDIA and the chip stock soared. It was NVIDIA announced it's resuming sales of its H20A1 chips to China, sending NVIDIA shares up 5% in pre-market trading. So it lifted everything. It lifted AMD, SMCI, Marvel. Yeah, that was the cause of it. Wow. Okay. So look at this, guys. They're really, really bleeding it out. RSI is down to 15. Okay. So this is where they could just really bleed it out and bring it back up. So that's why, guys, got to be careful buying, you know. Wow. Okay. So now it traded. Let's just locate the wick and look backwards, okay? So right there, it traded into that big bullish candle that really started this entire move. So can we come back up, or are they going to really bleed this thing out, okay? Notice how I'm not in a trade. So I'm just observing. I'm just a speculator. I'm just a spectator here on the sidelines watching COMEX market and big CPI news. So maybe, like what I said, that scenario 1, they're bleeding it out as much as they can, because if the CPI news month over month and year over year is increasing, that's not good for the US dollar. Could see a weak US dollar selling, and then look at where gold is. It's right at the bottom. It's oversold. That could see a move back to the upside. Okay, and we're trading at a nice psychological area, 3,350. Again, that's just a bias, okay? Is that what's going to happen? I have no idea. Do we still wait for confirmations, or do we just trade blindly prior to the news? Okay, that's not a strategy, but it's good to have a bias. And then if everything starts to align with your bias, that could give you the confidence and the confirmation to go into a trade, okay? That's how trading works. You got to kind of plan it before it happens and then trade accordingly. Just don't over leverage, okay? Because you might see a huge candle that could go against you, okay? Look at just right now the range of this candle just prior to even COMEX market opening up, let alone news. That 5-minute candle is 35 pips, okay? So most retail traders that are trading these lower time frames, 5, 15 minutes, their stop losses are maybe 30, 50 pips. So one candle, 2 candles can take you out, And if you're over leveraged, you're in big trouble. Sengar, you're all in on a go long. Good luck to you. All in. Okay, so you're moving all your chips in. You got the nuts. There's nothing like, when you play poker and you're all in. So you're telling me that there's no hand that can beat you. You're that confident. You're all in. Good luck. I wouldn't go all in. There's no trade I would go all in on. Never. I don't care what it is. Because if shit happens, you lost everything. No way. I wouldn't even buy, I wouldn't go all in with all of my money to buy Nvidia, to buy Tesla, to buy Bitcoin. Never. Never. You always got to leave yourself some outs, even in poker. That's a gambling, Sherry. Yes, we're not gamblers here. If you want to gamble with your capital, all I say is good luck. I'm not here to guide you. That's on you. We're all mature here. Joel, what about love? Yes, I go all in on love. Love, I'll go all in. I went all in with my wife. Yes. I don't gamble with love. I go all in. Okay, here we go, guys. So this is Comex now. Okay, and 10 more minutes. We have big news. Okay, so you can trade right now, like the gentleman over there, Sengar, went all in. I hope it plays out for him. But I myself am not going to go all in. I might take a trade, but it's not going to be all in. No way. Yeah, so we found a little bit of a bottom currently, 3,349.50, just broke below that 33.50. Good move coming right back up, but we're still below the 9. We're still below this red box. We're still below hourly resistance. So it could definitely just come right back in here, push back down. But at least we're starting to see a little bit of something, okay? We're seeing some bullish volume. Oh, yes, Tony, check your spreads too. Thank you for reminding everyone. Shout out to Tony. Check your spreads because, it might hold you off from taking a trade. My spread on gold right now is 1.1. Normally at this time, it's 0.5. So kind of my spread is now gone up 2 to 3 times as much as it normally is. 1.2 right now. Again, yeah, check your spreads. Okay, so big bullish candle coming back up. It's going to close in 2 minutes. If it closes like this, I'm going to look at where 50% of that is, maybe a pullback. Is it building? This could just be the first move coming right back up. Again, it could come back down. We could look for a double bottom, but so far found its good support coming back up. And then we got, guys, just a heads up. Okay, for those that are joining, and if you're gambling, look at what you're gambling against. Hopefully you're not gambling. We have these big US folders, all of the CPI coming up. Okay, big bullish candle. Sango, you're right, man. All in. Hopefully you hit the jackpot with that candle. Scale out a little bit and move your stop loss to break even is what I would do if I went all in. Okay, so here we go, guys. This candle, okay, it's a very bullish candle. Okay, but if we just look at if we grab our Fibonacci tool and we just place it from the 620 when everything started, this downfall, and bringing it down to these most recent wicks right now. Okay, again, see how I got to reverse my Fibonacci here. Let me just reverse it. There we go. Okay, so this first retracement, there's the 23.6. So it's coming up. There's the 382. See the 0.5 is at my yellow line right there. And then the 618 retracement is in that red box. Okay, so we're getting a nice pullback, but we'll see, will it come back down? Will it close above here? Can I make this red zone green? 50% of this bullish volume is kind of right below this zone right here. There's the close, okay? Did it close above the red box? Not yet. Okay, will it pull back a little bit? Could we get a buy going into CPI? Like here's the pullback to about 50%. Look at where my cursor is. We do have a buy signal on gold at 3355. So 3355 is just right above here, okay? So keep that in mind. Just over here on Discord, we got a signal on gold right over here. Long XAU 3355, so at 825. So it just came out a few minutes ago. Right here, okay, so we're coming back down. Where 50% of that bullish candle. I know it's a lot of boxes, but if I was just kind of looking where 50% of that candle is, somewhere right around there. Should we get a wick here? Will it push back up, or are the sellers going to bring it right back down? Look at, they're already engulfing all of that volume right now, okay? So this is prior to the news, okay? And this is COMEX market opening up. Okay, so it's closing in 3.5 minutes. All I see is a big bearish candle coming right back down. Okay, but it's got a wick, higher low. Will it push back up? Remember, notice I didn't change this red to green yet because I didn't get bullish volume closing above that 3355. It's still in that red zone, so I still go with the red volume pushing down. Okay, so get ready, guys. 3 more minutes. Big wick now. Okay, good wick now, coming back up. Let's watch where this candle will close. It could flip and turn as a hammer, and it's got a short wick to fill and continue to drive to the upside. That could definitely happen. Okay, if you're going to trade that, just trade with the risk accordingly for your stop loss, just in case you do get stopped out. Everybody have good spreads, or are they a little bit crazy spreads right now? I'm still sitting about 1.2 right now. But that will dramatically change as soon as CPI hits. Nigel, you're 1.8 to 2.2. Sean, 2.8. Yeah, it's normal when there's high impact news. Okay, so 90 seconds going to close. Got a good wick coming back up. That is technically a higher low. Okay, so it is building a little bit of support from the bottom. Okay. This is the news coming out, everyone. Okay, so right here in 1 minute, it might be just delayed a little bit when they release it, but we got core CPI month over month, CPI month over month, CPI year over year. Big news. Notice how I don't even care about the Canadian news. All I care about is that big US folders. I love Canada, but the US news is more important to the financial markets. Okay, so look at, are they going to flip that candle, turn it into a bullish pin bar and a hammer, going into the close the last 30 seconds. Okay, so this could just, watch, it could be an explosion when it breaks out of here. Okay, it could close, it could be a gapped up, ignited bullish candle. Just look at it, just the wicks are almost already filled and it could just drive. Or they could kind of gap it down and bring it down. And then what we look for is maybe a quick wick and a drive. Okay, so get ready. Okay, I'm ready. Still, my spread is around 1 pip here. I don't normally like to trade right as soon as they drop the news, but I'm just watching. A big bullish candle. It opened. It came back down. It picked up higher low. Coming up. It's trying to break. Okay, there it is. There's big bullish. There it is. That's it. Sometimes you miss it. Okay, I missed it. Do I want to jump in now? Now I see the retracement, and then as it maybe pulls back up, then I can go in. Okay, it's an ignited bottom. Shit, you miss it. Like, you see how fast it is? That's 10 seconds. Okay, again, I haven't even seen the results of CPI right now, but let's see if they're released. Okay, so it came core CPI lower than expected. So yeah, the US dollar is dumping right now. Okay, so it came right up to our daily point of interest. Got a wick coming back down. You don't need to trade this candle. Okay. Oh my God, Nigel, your spread went up to 9. Whoa. Then yeah, you need to stay away from this until things settle down. Okay, so see how it's coming down. Look at where it got rejected at our daily point of interest, coming all the way right back down. Are they going to lose this ignited bottom and it's going to turn bearish? Yeah, don't, guys, if you got a 9 pip spread, do not be trading now if you got a 9 pip spread. That's ridiculous. Okay, so CPI year over year. Okay, 2.4, 2.6 increase. Not good for the US dollar currently. Look at that. Oh, they flipped that candle. Wow. Oh my goodness. Okay, so opened bullish, came back up. Look at the US dollar is falling and gold is falling. So you see sometimes how these things are not correlated. Okay, so it came right up through there, right to that daily point of interest, 3360, got rejected, coming all the way right back down. Okay, so wow. Okay, so it's pushing down. Will it come right back up? 3 more minutes to go. We'll see where it closes. I haven't taken a trade. Okay, so now we're kind of indecision, right? There's some indecision here. I'm just going to get rid of this. Okay, so that's a choppy candle. It opened bullish, ignited, broke, came all through here, got rejected, came all the way right back down to here, to these bodies, coming back up. The volume is still below the 9 EMA, still below this red box. You know, if you're just waiting still for volume to close in here, you could just be still waiting. Okay, you don't have to go crazy on that first minute that it opened. See the volatility and the spreads. It's not a favorable time, you know, to be taking those type of trades. So if you haven't, great. Don't worry about it. Don't sweat it. Just let's continue watching. Okay, that could be a fake out, right? These were good results on the year over year. Could be a fake out. Could continue to push down. Okay, and then now this bar, the first 5 minutes of CPI data is going to close. We'll see where it closes. Right now it's a bullish spin top. Just recapping of how it opened, it was really bullish, came up to that right there, that red box, got rejected, came back down. Look at the volume. It's trading again right in that zone. So that's what I mean, the range of that candle, okay, from the, it's a big, look, it's a 100 pip candle range, okay? And then look where the volume is. Still right trading inside here. So if it trades inside here, got to maybe wait for another candle, or you just go with your bias, maybe to the upside, the way how it's got a higher low. Okay, here's the close in 30 seconds too, okay? So I'm just going to clean up, like these little red lines are irrelevant now. I'm going to stick with my bigger zones, okay? And look, it might close like right in there. Look at the volume, bullish, bearish, and bullish, volume, bearish. Man, so that's what we call volatility. Okay, so here's our new candle. Did close below there. Should we look for sells, or should we look for buys, or should we wait? Okay. If you're going with the trend, you're possibly selling. Okay, it came all the way up, but that's still lower high and pushing down. Okay, will it take out these lows? Got a higher low, higher low, higher low. Will it fill and take out those? Yeah, our live is a few seconds delayed. We'll fix that. I had to reconfigure everything on the OBS, so I don't know if it did something to the latency. Normally it's like 10-15 second delay. If it's more than that, we apologize. I'll get it fixed. When we were having those interruptions on the YouTube where everything was freezing, I had it all corrected, but we maybe got to fix that lagging as well. So thank you. We'll get it corrected. Okay, has anyone taken a trade, or like, to me, when spreads are high and then there's high impact news, like you don't got to jump in right away, because like I said, if you were in a buy, if you didn't do anything, then you're in drawdown. If you're in we can still wait. The volume is still still consolidating. If there was no news and I just said to us guys, and this was just a regular day, let's just trap this and let's just wait patiently for something to happen below here or above here, then we're just waiting, right? If you want to trade this craziness, you can, but if you don't do anything, you could get yourself in trouble. Okay, sometimes you don't need to trade right away when there's news. A lot of prop firms don't even allow you to trade. There's like I don't know. I don't use too many prop firms, but some prop firms, what I read is they don't even allow you to trade high impact news, or there's a certain amount of minutes you got to wait before they release the news for you to even trade. Some of you guys said you guys have high spreads, anywhere from 5 pips to 10 pips. Why would you want to trade at that time when you're behind, like, on the trade? Now check your spreads. Have they came down substantially? Are they a little bit more suitable for trading right now? Okay, and just a recap of the news really quickly here. Okay, I'm not going to go in depth here. Our core CPI month over month, remember this one? This one excludes food and energy. What was it? Okay, it was 0.1 last month. They were expecting an increase to 0.3. It actually is red because it's 0.2, a little bit below their forecast, but still above previous month. CPI month over month. This one includes everything. Okay, so it's above previous month. 0.3 was our forecast, right on forecast. The big one, CPI year over year. Okay, so it was 2.4% this time last year. They were looking for an increase. It actually came out above 2.7. Okay, so maybe the year over the year was the big one. And here we go into the close of this candle right over here. Okay, and if you look at the US dollar really quickly, see how it came all the way down bearish, and look at it, it's coming all the way right back up bullish. Okay, so look at the US dollar on the daily, could flip very bullish right now. Okay, so keep that in mind when you are trading gold here. Okay, so it could continue to further selling down. This candle's closing in just a moment here. Okay, so and if it closes below this red line, that red line was support, support, support. It might be a quick little resistance. Okay, we closed right near the low. Bearish ignited candle just dropped. It may come up for a retest. Can we figure out where 50% of this bearish candle is? Somewhere maybe right around there. Also that zone. So if you're looking to buy, we've got to see some bullish volume, maybe closing above here to continue to go up to the upside. This could just continue just to sell right back down. Okay, so now it could come up, could possibly get a retest to continue to sell. You might lose your entire bullish body on gold on the daily. Okay, it's just held by this much volume left. We're right near the opening price. We're right near the lowest point of the day right there. Okay, so that's why sometimes you don't want to go all in on a position, because just an indecision candle like that could really, really ruin your day. Okay, how are spreads now? Are spreads a little bit more calmer for everybody? I'm just looking at mine as well. Yeah, mine's came down now less than a pip. Okay, so a little bit better than what it was. Okay, so now we might actually get a retest here where it's coming back up, may continue to push back down. We're getting a new 15-minute candle. So some traders wait a full 15-minute candle when there's high impact news. If we are, this is what you're looking at on the 15-minute candle. Okay, so remember the news opened, it was bullish. It opened, came right up to that red zone, got rejected, created a new lower low, and we still have this much bearish volume left in the 15-minute candle. That's going to close in 1 minute and 50 seconds. Okay. And then you got the 15-minute candle closing below its 200 EMA, and there's the 9 EMA. This could signal future bearish death crossover on the 15 minutes to come in the next little bit, okay? Suggesting that gold still has further movement to the downside. Nigel, much better. 1.3 is a lot better than 9 pip spread. So now it's manageable. Now if we're looking for trades, good time to maybe now enter the markets and look for some trades. Okay, so just watching this body close. 1 more minute. We're coming right back up into this red little pocket. Will the sellers be there to push it back down? Will it close above here? Will we get next push back up? Sanger, you're long gold now? I thought you already went all in. You're going all in again? Just be careful, sir. And we have the last 30 seconds. Okay, so 10 seconds. Watch the close, guys. Okay. Will we be able to flip this little zone green? I'm going to assume we're closing above there. Okay. I'll look for maybe a quick little retest. Maybe we see some upside movement. Open bullish ignited, small wick. So just keep an eye on that bullish ignited body. Will it go bearish? It's still holding, still holding, still holding. There, we just lost it. So let's look for a quick little retest of that green zone and to fill back up. And we could possibly be moving up to the upside. Okay, let's see for a retest. It's a small, tiny doji candle. Okay, still holding a little bit of volume. Holy, like look how small, tiny the candle is when we had all that substantial volume, and now we got this little one that's barely moving, okay? So just how the market is. And remember, this candle is representing a 15-minute body open, okay? So it's transacting in a really, 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 really tight range, okay? So now it's coming in, okay? So now the official retest of the green zone, let's look for maybe a flip to the upside, or will it come deeper down into that green zone? Okay, so now it's officially retesting in there. I'm looking for maybe a possible buy out of this retest. Okay, right there. Okay, so it retested nicely, came back up. I just want to see a little bit of blue volume, and I'm going to possibly go into maybe a buy here if it can come back up. Might have to come deeper down in there. Again, I'm just waiting here. There's still 3 minutes left on this candle, lots of time. Still holding this little support area. Okay, but see, I'm holding off. Okay, so it's coming back in. Will it transact all the way inside there now? Is that enough to maybe hit some more pending buyers and flip it back to the upside? Or are we just going to continue moving down? Okay, so it came deep all the way through that green zone, hit those pending orders. Now all I need is the candle to flip with okay, I'm gonna go on a buy now. Okay, so I waited for it to come in there. Finally came in there. Now I just gotta adjust my stop loss. Okay, so I'm just gonna place the stop loss, inside the bigger green zone below that wick, and I'm looking for a move to come back and fill the CPI wick all the way back up there. And maybe, who knows, maybe we can just break out for a new higher high up there. But I'm in a buy, but we do have this big red zone above us. So we could come in here and get rejected. Hopefully we can maybe push eventually and get some bullish volume closing above here so that we can move this red zone back to green. And then maybe we're pushing up through here, okay? But we're coming into a red zone right now, okay? So I waited for that retest. That's 20 pips up to the candle body right now. But filling up through that red zone could be about 40 pips. Up to the 200 EMA is about 50 pips. So I'll leave it right there to the 200 EMA, that purple line. Maybe more to the daily. It's beautiful. 618. The 6.18. So it's 61.8 pips if we can get it to that yellow line. Very, very Fibonacci ratio number, okay? Okay, so notice we're moving up to 20, 25 pips, 20, 25, depending on your spread. Is it enough to reduce your risk? It all depends. If you're looking for a quick scalp, we're looking for maybe a possible bigger move to come up at least 60 pips up there. Okay, so did you see what I did? I waited for it. It came deep down into that. And then as soon as it flipped, that's when I went in my buy. Okay, remember when it opened, it was that small doji candle, but then it came down into that zone. Okay. And keep an eye on the closure. 10 more seconds to go. We're right at that hourly white line. Okay. So it's about 30 pips up. 30 pips will be up to there. There's the close. So we closed in the red zone. So, when we close in a red zone, we could come retrace back down, right? But we got a short wick. Maybe we can push and then just fill a little bit more and get it above here, okay? But if we have to pull back, we might pull back into 50% of the previous candle body. Half of it is right there, that red line. Jay Robertson, you pipped and dipped. Nice. Yeah, if you got a pip and dip, that's cool. That's all good. If you got a pip and dip, do your thing. Okay, so you see we got rejected in the red zone. I'm not surprised by that. Now we're coming back down to retest. Okay, so that was 50% there. Can we get a wick? If not, we're coming back down to where I entered. So then it will be, like a break even trade. I haven't moved my risk in this trade. I'm just waiting it out to see if we can continue to build. Let me just get rid of this arrow. Maybe that's confusing you there. Okay, so we got a good wick, a little bit above, a little bit below 50%. We got a wick. Now can we kind of continue to ask to trade near this hourly resistance, maybe above here, then maybe we can flip. If we can break out of here, like a lot of short sellers have their stop losses maybe up here, we can maybe start to transact in there. And then that's when, if we start moving up here, like 40, 50, 60 pips, that's when I'm going to start reducing my risk and then maybe scaling out a little bit. But we're battling through this big red zone. So it's not easy to break a zone. It takes time, energy, and volume to break zones, especially when we're kind of counter trading the official trend. So it's not easy. It takes time to build these things. But what I see is a higher high, a higher low, a higher high, a higher low, a higher high. We just need volume to follow through. It's all about follow through always when you're trading. It's all about follow through. And then half the candle is exhausted. We have now the second half to go, 2.5 more minutes to go before we get our closure. So hopefully maybe we can get some buyers asking to trade up here. We have a lot of sellers in the red zone still there. You guys might hear my stomach growling. I'm starving. Trying to lose weight. I'm doing this intermittent fasting, and it's been like 14 hours since I've eaten something. So want to get some pancakes here. Okay, so we got 90 seconds to go on the close. We're still transacting in this red zone. Again, it's red for a reason. There's sellers there. We're buying into it. So we want to see if we can close strong. And that a white line, that's that hourly point of interest. So we still have 5-minute volume below that hourly white line. We want to, as a buyer, get the blue volume above that white line. So we can make it into support. And we're going into 9 a.m. in 5 more minutes. So that is also another important time in the markets. Okay, so we've got a big bearish engulfing candle coming right back down into this green zone. Okay, so the thing that sucks is I was up 25, 30 pips. I gave it all back, but I'm still in the trade. Okay, in order to hold trades for longer duration, you got to go through the ups and downs. That's why I have a stop loss down there to allow it time to come down here and maybe pick up more buyers and to try and break through this red zone. However, when that happens, you could be waiting and you will eventually maybe get stopped out. Okay, it happens. Okay, so that bearish engulfing candle completely engulfed all of the buyers in that candle, including myself. So now we've got to see if buyers will come in on the next bar. If they do come up, they're battling against this big bearish bar. So, where's half of it is right there. That could be the ongoing resistance right there. Now it's trading a little bit deeper down into here. Oh, okay, guys, I gotta go grab that. That's the doorbell. That's my buddy. I'm in this trade, guys. I got my stop down there, profit. I will be right back in 2 seconds. I gotta go open the door for him. I'll be right back. I'm in the buy still. Okay, guys, it might get loud in here in a few minutes. So we'll see how it goes. As long as you guys can still hear me and it's not too loud, then we'll continue with this. But okay, guys, so I'm in drawdown on this trade here. Okay, so we're going into 9 a.m. 9 a.m. Okay, on the hourly, it's probably pretty bearish on the hourly. So we've been pushing down for the last 3 hours here. 6 a.m., 7 a.m., 8 a.m. with that news. We came up there right when CPI was released, and then it got rejected, coming back down, all the way down. That's the lowest point so far. I took my buy right there, so you can see I'm in drawdown. But we'll see next hour, 9 a.m., will we get a reverse back up, or are we going to continue come back down? And then that's my stop loss down there. Some of you guys pipped and dipped out of that candle. I didn't. So, I'm still holding. Looking for larger move. We do have a little bit of bullish divergence on RSI, but again, with news, it's not as Not as confirmed bias when you have bullish divergence, when there's big news, because you have more volatility, more range in the market, more volume. So it can really affect that. So again, I just use it just as confirmation, just to look that there is some sort of divergence, but still we're pushing down. So, and again, this candle, if it closes below, this green zone is going red. So this is where, if the buyers are going to come in at 9 in the morning, they should be coming in, because this could be like kind of double bottom area. Then I want to see kind of 9 a.m. maybe a push back up to the upside. Okay, but it did close below that zone, so I got to go through my motions. I did close below, so it is red. So the buyers are buying back into another red zone, but this could make that double bottom, what I was just talking about. But again, we got to get volume closing back somewhere where where I bought in, back above here, so we can build off of this and then take out this upper red zone. Okay, so 9 a.m. is coming in, new hourly candle. We have hourly buyers, but they're battling against the resistance. We're still below the 90 EMA, still in the red zone. So it came up, they rejected it back down. So still bearish. Okay, and notice we're not making a new higher high. So I'm very technical. I like to see, if I'm in a buy, I want to see higher highs continue to come in the market and build off of higher lows. When it comes up like that and you get a lower high, the sellers are still there. They're still strong. Then they could come down, take out that low, and then come target this low, and then put myself further into drawdown, possibly even get stopped out. So I'd like to see, some bullish volume creating a new high. I don't have it yet. So it came right through that red zone, right up to that 90 EMA, and rejected. So sellers are strong. So are we going to find some buyers at the what's left of our daily bullish volume down here? If not, that's it. It's the low of the day. I'm not willing to take any more loss on this. Then I step out of the markets. Step out of the trade, sorry, not out of the markets. I hope it doesn't get distracting here when he turns that machine on. Okay, so we got 2 more minutes to go on this candle. Okay, there's kind of equal bottom lows. It's technically a higher low, but from those wicks to those recent bodies, that's where I start to draw a zone of support. Okay, and then I start to determine whether this is going to be where we get our double bottom on the lowest point down here, and where it will build its second bottom. Okay, so again, needs to come up, maybe create a high or close somewhere above this red box, so that I can make this depth of market green, and we can build off of these 2 green boxes. It's tough to say. It can go both ways. Even the candle is undecided where it wants to go. So it could definitely continue to go down to the downside. I understand some of you guys are selling. I completely understand that. And some of you guys might be in buys, but we're struggling to make these highs up here. That's why sometimes if you give a trade some room to breathe, it can build. Albo Neil Forex, you think that there's still some buyers? Maybe, we'll see. But they got to. It's all about follow through, guys. I've been saying this from time to time. It's how you follow through and how you close a candle, whether you're a seller or a buyer. Okay, the buyer's got to close with some conviction. They got to close with some strength. Close with a nice bullish body, maybe creating a new high and closing. That could create more buyers coming in the market when the depth of market changes. Because if they keep getting rejected, then the depth of market above us keeps changing. More offers keep coming in the market, and we'll absorb the current buyers we have and continue pushing the move down. Okay. So here we go into the close. Okay, so did we close above this red box? Yes, we did. So right there. So I just go red to green, and we got a bullish ignited candle. So maybe we'll get some upside momentum with this. And guys, everyone on YouTube, just remember the giveaway. Okay, we do have the giveaway on Telegram. There's a free Telegram channel pinned at the top of the channel. It's right over here. It's available for you guys. Right over here, guys. This FXFI is the prop firm account. It's a $15,000 account giveaway with a free 3-month membership at SST. The way how to get involved in this and be the lucky winners, follow us on Telegram, then click on the link to Instagram. Head over on Instagram, find the giveaway post, and tag 3 traders in the comments who need to see this. And you may be a lucky winner of a $15,000 prop firm account with 3-month membership here at SST. So it's available for everyone at the top of the YouTube channel. Okay, guys? The machine is working. Is it loud for you guys? Do you guys hear it? Is it distracting you guys? No? Really? Okay, so then if you guys are not distracted by it, then we can continue going through Wall Street. But just let me know if it is getting distracting. I can maybe talk a little louder and things like that. Okay. We're not going to stay with gold the entire morning. Maybe we'll stay 5 more minutes with this candle, and then we'll move over. Let's pick one. Let's focus on one index today. So we keep it just gold and one other one. Would you guys like NASDAQ or US 30 or S&P? What would you guys like today in Zoom? I see Dow. Okay, so 3 Dows right away. We can do that, no problem. Okay. And now we're barcoding. Okay, so you got a bearish candle. We had that nice bullish candle. And then again, it's coming down bearish. But see how I made that one green and this one green. So we got two orders where there could be buyers, but still have a lot of bearish volume coming through. My stop loss is below here. I could open my stop loss, and put it below the lowest point of the day, but I don't necessarily do that. I keep it below some structure, and I give it enough room to breathe. If it doesn't work out, then I'm stopped out of the trade. The point of a stop loss is not just to keep putting as lower as you want and just hope for the best. I put it, if the buyers are not here or here, then that's it. I'm out of the trade. Will they come in over here? Possibly, but then I can maybe pick up trading if they do come in there. Okay, so this bar is going to close in next minute 40 seconds here. Oh no, Pascal, you're in drawdown due to the noise of the machine. Oh, let's not blame the machine now. Then I'll blame it too. I'm in drawdown too because of the machine. I might get stopped out because of the machine here. Okay, see how boring gold got now? Now it's just kind of accumulating. Okay, so we got buyers accumulating and sellers accumulating. So sometimes now we got caught in a consolidation phase. Prior to everything being released, there was a nice downtrend that came down, and then you see where the market volatility opened up at COMEX. That's when we had the big CPI news. We came down, kind of found the bottom, came back up. At that, we're having a difficulty time breaking that hourly resistance at 3355. It came back down. We were coming up with a nice strong bullish candle, but then we're coming back down again. So it's bar coding: bearish, bullish, bearish. And then again, like if you're going with this like structure that I have, okay, we close below that green zone, so it's red. Unfortunately, and the open bearish ignited, pushing back down. So they could take out, fill those wicks, take it out. And again, my stop loss is just below there, okay? And then we'll do some Dow. Okay, yeah, like I want to go to the Dow. I trust you guys can manage this as well. I'm in drawdown, but that's where my stop loss is, 3344 down, right down in there. So if I get stopped out, I get stopped out. But let's take a look at what the Dow is doing over here. Okay, so I'm just going to do a quicker analysis on the Dow. We're going to add the daily bar indicator and look at the Dow on the daily. Okay, it's as choppy as you can get. So we opened, we're virtually right where we opened. We're right back here. So what is the entire range? When it opened, it was bearish. Where we came down, we made the low of the day. Right there. What time did we hit the low of the day? It was 8:20 a.m. Eastern this morning. Okay. Then it came right back up to where it made the highs right over here. So this was just prior to 10 p.m. when we had that news with NVIDIA and things like that. That was causing that nice big bullish move in the stock markets. When we came up there, you can see it retraced all the way back down, and we're virtually right back to the opening position, but there is some structure on the 5 minutes. Okay, right up here with just using our eyes, we can see that there is some sort of resistance right here, resistance right there, resistance right there. Again, stretching into the future, we came in there at 6:30, we came in there at 7, and it's still resistance. So let's add that into the future. Right now, our current volume is trading right here. How we came up to this red zone, look at the 5 minutes have tried. So keep this on alert today. If we do close above there, it may use this as support, and maybe we'll continue to move to the upside later today. Okay, so what I do to acknowledge that is I place a line in there, and I'll place an alert in there. So that will alert me that if it does get up to around 44,530, that we could maybe possibly see some good buying opportunities, okay? But is there any other zones like that we can see? When we find one, can we find another one, maybe a green zone? Okay, I see this area holding good support right there, where I could, if I made that in a green zone prior, that was green. I can see when it came back down, what did it do? Bounced off of there. I can see right there it broke at 4 a.m. but came back and retested and held it. Okay, so that looks like a little fake out near the low of the day. And then again, it just broke down there, which caused the low of the day, but it got right back up and we've just retested it. So that is a good opportunity maybe to place a signal. If it does come back into there, that maybe could look for a possible buying opportunity at 44,420. Okay, so I've added an alert in there as well. And now just some points of interest right here. Like we got right there, bodies. That was when we released, okay, that big candle is CPI right there. It made that push. It closed right there. So it's using that as a point of interest. Again, push down. Now we're coming right back up. So that red line is the point of interest. We'll see, can we get some volume above it, or are we going to push back down? Okay, so this is for Dow. going into Wall Street in the next 15 minutes. We are currently above the 9 EMA, and we're currently above the 200 EMA. We're technically having a golden crossover right now, so we'll see if we can build off of this going into Wall Street. Okay, gold is bearish right now, so we'll just look at gold real quick. Yeah, it's still bearish. Okay, so still really bearish. This bar is closing in 5 seconds. Again, not a good strong close by the buyers. You know, I see a big bearish engulfing candle coming down. Again, that one opened bearish, pushed down, filled that wick, caused a new low in the market. That's what I don't like to see. As a buyer, I don't want to see continuation of lower lows. I'd like to build higher lows or equal bottom lows. So that's going against me. So very possibly I'm going to get stopped out of this trade. Okay, it's filling that wick and now it's coming down. So if it doesn't get any support in here, very likely I'm going to get stopped out of this trade. I'll verbally let you know as soon as I get stopped out. My broker is a little bit different than TradingView chart right here with FX. How many times when you get stopped out does the trade reverse and go where you wanted it to go? It happens. You know, one famous trader said, where your stop loss is, place a buy limit. And from time to time, you're going to make successful trades like that. Okay, so I just got stopped out. But it happens. Okay. Now, do I go just right back into a trade? No. Just kind of maybe fix up these zones and trade accordingly. So it's still very bearish. Okay. But what we'll do is we spent enough time on gold today. We're going to move over, look at US 30 here. Let's watch how US 30 goes into Wall Street over here. And if you really want to kind of consolidate this as much as possible, okay, the sellers are here. I can see where the buyers are buying into there, and they're still getting rejected inside here. Okay, so this could be, you know, a lower double top, okay, where it came up, back down, coming back up, lower high, and maybe pushing back down in here, you know. But I don't want to trade inside these zones. I'll let it accumulate until we have Wall Street, and then Wall Street will trade accordingly, okay? And then now we got Fed Bowman is speaking, FOMC chairperson. What else we got? I wasn't reading too much of this news. Is anybody in a trade on Dow currently while we go into Wall Street? We can do the same type of charting for NASDAQ right over here since we got time. I'll do the quicker one, just utilizing our daily bar indicator and just seeing how NASDAQ is moving. So NASDAQ, completely different story from Dow Jones, okay? So you can see the opening price right there is where we opened. You know, I can place a yellow line there, a yellow line at the opening price, 22,880 right there, roughly. That was our opening price. Then it made a low right there. Okay, so our lowest point is right there. What time did we hit it? It was roughly right over here, 7 p.m., 8 p.m. during the futures market. And then we had that big bullish push right there at 8:30. That kind of push, that big move to the upside. That was that news about NVIDIA with their chips and with China. So it came right up and then we pulled back into there. So do we have a good pullback support level? Yes, right there. Okay, this is how I start to determine my zones. If it ever comes back down in here, I would love to be a buyer right here. I'm buying back at the opening price, and I could be buying where all those buyers bought in. I could get another dip buy right there at 22,885. I normally place an alert in there, and I wait for it to come to me, okay? As we were coming up, look at, we're trading at the highest point of the day right now. Even if I do a purple line, we're at the highest point going right into Wall Street, okay? Also, there's good support here, one bottom, two bottom, three bottom support right here. Can we draw another bullish zone right there? Absolutely we can, okay? Right there, still holding. Just under 23,000, 22,990 to 980 still holding. That could be a good opportunity. Maybe Wall Street will pull back down into here, and that could be a good opportunity to buy out of there. Again, set yourself up for success with just place an alert in there. If it eventually comes down to you, that doesn't mean you just got to go in blindly and take a buy, but you can watch what's happening, okay? And then do we also have like a resistance that could be turned into another support level? Right up here is where we have our resistance. You see when it came right up there, it got rejected a couple times. Right there, got rejected. Continuing with this. It came, impulsively broke out, volume below. Now we got volume closing above, and we continue to push. That could be another pullback. Which zone is better to buy in? Obviously, this one down here is the best zone. Okay, you're getting the best discount at the opening price. This one is the second best opportunity to buy. This one is a good opportunity, but you can see it could just be a shallow pullback right into there. Yes, you could buy that, and it could do that. But however, if this one doesn't hold, that one would be possibly the better opportunity. It's deeper. It's a better discount, okay? So that's what we're looking at on NASDAQ. And again, above here, if we continue to break out bullish during Wall Street, look above the purple line. When was the last time we were trading above here? I can't see anything on the 5 minutes. Any 15-minute volume above the purple line? No. 30-minute volume? No. Hourly? No. 4 hours? No. Daily? Weekly? Nothing. Why? Because all-time high territory, right? Okay, and any points of interest if we pull back, maybe like right around here, where we had a wick, a body. See that blue candle closed above, and then now it's using that red line as support, okay? So it's new all-time high territory. And what we'll do is we'll keep these two side by side. Okay, let's put these two side by side. So trade which one you prefer, either NASDAQ or US 30. And we've got about 7 more minutes to go until we get into Wall Street. We've got a strong US dollar off of CPI data. That's why gold is still pushing down. So there wasn't any recovery on gold. And also everyone on YouTube, the free giveaway also, on the free Telegram channel. It's linked over there for you guys. This one, 15K. We'd love to give this away to a lucky winner, $15,000 account and a 3-month membership. Just follow the instructions and hopefully you're a lucky winner. Okay, and then just some big names in the pre-market right now. What is possibly moving the markets? AMD is up 5.25% right now in the pre-market. NVIDIA 4.75% in the pre-market. So really, the tech sector is pushing. SMCI is up 4% right now. So those are the big names right now. Okay, so big tech is leading the way. Sorry guys, this machine he's using is very loud for me, so hopefully we can get through the next 30 minutes in Wall Street. Okay, so that body did close above this zone currently, so I'm just following this volume going into Wall Street. Okay, could be a possible pullback entry here to the upside. We could lose this, then we got selling pressure down to here. NASDAQ is still pushing considerably bullish. Okay, it's in a very, very parallel channel right here. If you do draw trend lines, you can see how kind of parabolic it is, and straight up. And same rules apply when Wall Street market opens. You're either in a trade prior to Wall Street market open, so you might be in a buy, you might be in a sell right now, and market opens. It just increases the volatility. Maybe open up your stop loss, reduce your risk. You can trade the first 10 seconds, first 20, 30 seconds of Wall Street market open. If you see a pattern you like, or you're following a current pattern that's already building, and it's going with your bias, you're welcome to trade market open. Some traders have rules that they wait for the first 5-minute candle. Others wait for the first 15-minute candle. Maybe they find the opening range of the first 15-minute candle, the high, the low, they mark it up, and then they trade after accordingly if any volume will close above or below that point. Some traders, again, watch from 9:30 to 10, and then they start their trading at 10 a.m. Let's just go through, do we have any news coming up during 10 a.m.? We had our CPI that came out. We got FOMC member Bowman speaking right now. 10:30, we have some Australian news, New Zealand news. So not much going on for Wall Street US news. And at 10 a.m. Gold is still pushing down, guys. So it just broke the low of the day. Look at gold's daily candle, turned into a bearish pin bar. So watch also, if you're watching gold, how market opens up with gold. Okay. US dollar is looking strong due to those CPI numbers. In 2 minutes to market open, again, do what we do. Check your spreads, right? Because we saw when CPI opened up, some gold traders here had spreads up to 9 pips, which was really, really high. So take a look at your NASDAQ, your US 30, your S&P spreads, if you guys are trading forex. And also remember, we had big banks earnings today. Tomorrow, again, 8:30, we got PPI news. So it just doesn't stop. Oh, guys, the sound. Okay. Yeah, I got a machine upstairs working right now. It's mining Bitcoin. That's the sounds of the big system I got going on mining Bitcoin. I'm just joking. It's we're just sanding the floors. This was the only time my buddy could come, from 9 to 11. I told him come around 10. He goes, I can't. So I apologize, guys. Try and not listen to that. I know it's distracting. It's very distracting for me too. I can't tell you how loud it is down here. But here we go, guys. Okay, regardless. Okay, just it's news and it's noise in the background. Don't worry about it. Let's worry about the candles here. We got 30 seconds to go for market open. Good luck to everybody. Please trade with proper risk management. That's all we can do as traders. Okay, if you do take a trade, you might make a successful trade. You might get stopped out. It's life. Welcome to the world of trading. Just don't over leverage. Okay, if you do, you might learn a lesson. You might need to blow up an account, lose money in order to figure this game out. You know, that's how I did. Everybody's different. Okay, here we go. So initially bearish. Okay, will it come down? Will it flip? Look at NASDAQ. Okay, so close below. Preceding candle was a bearish engulfing candle, pushing down. Remember, pre-markets were up pretty heavy. So let's see here. US 30 building, strong US dollar too. NASDAQ looking good. Alibaba up 6%. Nvidia all-time high, $171 right now. Will there be initial selling off, profit taking for these tech traders that are in heavy profit right now? Will we see, like, that's another thing to consider. Maybe a lot of traders are taking profit out right when the bell opens. Okay. Even though they're bullish, there could be traders that were holding overnight positions and now they're getting out of their positions. Okay. All of those things to consider. Okay, so we got the first minute that's expired. 1 minute, okay? This is what we got so far. Still kind of US 30s consolidating right in here. Okay, good push. Okay, I'm going to go on a buy on US 30. I'm going to place my stop loss below these wicks. Sorry. Where's stop loss at? I'm going to place it below the 200 EMA. And this will be my final trade for this session. So I'm looking for US 30 to build to the upside, to get up to that red box, and maybe see if we can break it with Wall Street volume. If it gets up to that red box, we're looking about 30 pips, but to break it, okay? Because we have not broken it. So if we do break it, looking to maybe trade up towards this next wick right up there. That could be a 75 pip move. It's already in profit, guys. Please, I'm just doing the charting for us right there. Okay, so that was the first 2 minutes. Okay, remember, big banks reported good results. I like trading Dow. Okay, so that's about 30 pips. Again, I was up 30 pips on that first gold trade and did nothing. Okay, so right there, almost 40 pips. We're looking to maybe break this with this Wall Street volume. Let's just punch through here. We don't want to just come up here and get rejected again. We want to punch. This is Wall Street market open. Oh, it's going to suck getting rejected there. Shit. Oh, that volume did not punch through. Okay, so you see how strong that zone is holding. That's going to come down and punish me now. Yep. My stop is very, very tight for Wall Street. Right here, just below the 200 EMA. Could potentially get stopped out. You know, again, I didn't do anything up there. My bad. Yep, stopped out. Fuck. Again, me not following the rules. Came right to my zone. Stupidity. Guys, that's just me not following my rules. You know, like, I don't know why I'm not following my rules. But just looking for that extra push, you know, on Wall Street to break through there. That was resistance, resistance, resistance. That Wall Street push, could have got it, it didn't. So came back and hit my break even. Or sorry, stop loss. Guys, I'm really distracted with this machine. We'll continue to stay here, but I hope you guys can hear me. try and go till another 10 more minutes here. Yeah, so see guys how the markets are pushing down. So made a new all-time high for NASDAQ and pushing down. It could be that profit taking, like I was saying. There was a lot of big gains in the pre-market. When market opens, a lot of traders could be exiting their positions, okay? Okay, guys. There's someone else at the door, guys. I got to get out of here. So tomorrow, hopefully all this will be done, all the sanding, and then we get a regular session tomorrow. But I do got to get out of here because he's calling me. He needs something upstairs. So, yeah, I'm coming. Yeah, guys, I got to get out of here. Okay, so have a great day, everyone. We'll see you guys tomorrow. Dave is doing a post New York session. Guys, everyone on YouTube, the free Telegram giveaway, join up on that. A free $15,000 account with the 3-month giveaway. Guys, sorry for all the distractions today, but we'll see you guys tomorrow. And Dave will be doing a post New York, okay? Have a good day, everyone. Thank you, guys. Like and subscribe to the channel, and we'll see you guys tomorrow, 7 a.m. again.